This is a breakout trade, and a breakout trade that doesn't have a preemptive entry. That's something that I do like to look for. So you've heard me talk about a trigger trade in the past, a trade that gives you an opportunity to get in before the move happens. This one didn't. We've gone up, we established lows at 62s, now we trade through 62s, and this is your opportunity to have a go at getting a short on. The reason that you can't be playing this as any kind of preemptive entry is because of the fact you get no preemption point. So this was the move. We got this breakout move here, false break of the high, fail, back down, back below previous day's highs. We then bounced, but we created effectively a little bit of a ledge at 60.62. That's what you're looking for to break. That's these multiple lows just here. So you're looking for that to break. It's then a case of monitoring for a continuation. Now what I mean by this is you want to be watching the market, and you want to be watching for any reasons that you can stay in the trade, any reason not to get out of the trade. And so far, that's exactly what we're seeing. We're not seeing a great deal of reason to get out of the trade. We got short 61s, so that was on this initial break. Now, yes, you are going to have to take a loss if this comes back, and that's the beauty of having that trigger entry trade, whereby you get in slightly earlier. If you have that, then what it means is, even if it starts moving back above 62, back above here, if you've got in somewhere up here, you're still not taking a loss as it comes back. However, we don't have that opportunity, and this is when you do have to sell it through the low. This time, on this move down into the lows, we saw that energy pick up from 64s. It was quite quick as I started that off. We're then slowing it down a little bit now. But that little bit of energy, certainly a lot greater energy in the move down that we saw down towards 62s this time than we did on these multiple other tests. That was your clue to get in. Now it's a case of monitoring for a continuation. So we've seen it down to 55. We've seen the bouncers not manage to get above 59, 60 area. So now we're looking for a break of 55. Your target is very easy on this. Your target was always going to be down towards the previous day's close. We opened in range, we pushed higher and fell back inside range. As soon as you've done that, this close then becomes a very clear target. So now what you're looking for is a break through 55 and then that continuation lower. So this is what I mean by monitoring for continuation. Where are the points that we need to see break to keep you in the trade? What do we need to see when it breaks as well to keep you in that trade? So keep trading around 55s. What we're going to see a little bit more energy as it gets through these 55s now. A little bit more of a push in it, and we're not really seeing that just at the minute. We're seeing quite slow movement, but equally it's not trading back up. It's not giving you any reason to get out of this trade. Traded quite a lot of size at the low now, which is also another good indication that we're unlikely to maintain that as the low. There we go, we've now traded the low out. We've got 1200 traded at the low. If this is to be a low, we need to take 55s out quite quickly now. Not seeing that again, we trade more and more into the low. And we cannot get back above 55. So this again, where you're watching for that continuation, no one's willing to buy this market now. It seems no one's really willing to try and take a stand and go, okay, 54s has held, we're going to buy it through 55s. So as 55s come back again. Now you want to see break through 54 and then that continuation down. Here we go, 54 offered, it's still having a good battle about it, but now we start getting their offer comes in. Sells through 53s. Now we're looking at it from the point of view, what does it do when it comes back up? No one's buying 54s now, that offer remains. Selling keeps coming into 53s. Still trying to absorb those 53s. So it's making it tricky here, but this is what I mean. You need to watch what's actually selling. That's what's going in the direction that you want the market going in. And what was happening is they were still selling to all that reloading at 52, 53. No one was buying off it. So that's telling you very nicely that you don't need to rush out. you can sit with this trade for a little while. Now you can start thinking, right, 55s is the area that I don't want to see this market trading back above. As long as we're below 55, I can have stops above there, thinking that we are going to then get the continuation down. 43 is still your target. That's where you're going to have these exits. That's what you're looking for your exit. So I'm going to trade back up towards 53. Still reasonably slow move at the moment. I've actually got this on double speed, so you can see just how slow this move really was. And this is what you have to accept with these moves as well. You're not going to get a move that just drops and drops and drops and drops and drops. It will happen occasionally. The majority of moves, you need to be watching for signs to stay in the move. And then what happens is once we get that next push down, we get dropped that takes us down towards 46s, which I talked about on Monday, before the final push down that takes you down towards 43, 44 area. Now, what happens on that move, as we discussed on Monday, the delta had already started to bounce there on that move, and so that's quite quickly giving you an indication that that final splash down into 43 is your clue to get out. That's where you want to be out of the trade. That's where you've already seen clues coming from delta, already seen clues coming from technical indicators that you don't want to stay in. Once you've seen that and you see that splash down, that's the time when you want to get out of the trade. So here we go, trading 49s now, 48s trade. You see straight away they take 49 bid and straight back on the offer with it. But we're not seeing so much now is the speed of selling into the lows. But equally, still can't actually push the market up. Still every time 49 gets bid, it gets taken straight back offered. So there's no willingness yet to actually start buying this market. Again, 48's trade similar. Takes it offered, bid keeps coming back. But the selling's still there, still willing to sell into those 48s. Okay, now we get down towards 46s. And then we start to bounce. So you do actually see, you saw 400 traded into bid there. This is where we're now starting to see this delta turn over a little bit. Yes, you're still getting absorption at 48, so yes, you can still be thinking about moving to the downside, but it is taking it out a little bit more aggressively. This is where the delta is starting to turn over. Still, we get decent size that's absorbed it there, so they take another 1,000 at 48s. So this could well be the last sort of attempt lower. So that final push down that we're about to get is that final little splash that goes contrary to the delta that we've already got coming in now. You start to see more buying delta again. You see that come in back up towards 48, 49. It's only when you get that final push down that gives you the real clue that you should be getting out of this trade. So here we come again, 48s. 48s keeps going bid. So this again is where that delta is starting to turn over. There we go, up towards 50s. And this is what's going to start getting people out of this trade. You know, people are now starting thinking, right, well, I wanted 43s. We're now bounced all the way back towards 50s. We're definitely seeing more buying coming into this market as well. Now it's been able to take 46, 7, 8, 9 bid. Couldn't take 49 bid at all earlier. And so that's what's going to start getting people out of this trade a little bit. But we don't manage to get away above 50s. We then start to have another dip back down. But we've definitely seen buying in this. Very, very different to that first bit of the move. We saw no new buying, and that was where, if you were just watching it, you could be saying, right, I don't need to get out, I don't need to get out, I don't need to get out. Now you can be looking at this thinking, depending upon how we do the next stage of this move down, I may need to get out. And so if you see a splash down, there we go, very quick splash down, no continuation, that's telling you it's time to get out of the trade. You've met the objective anyway down to the close, so prime time to be getting out of the trade. And we then do reverse all the way back up towards 62s.